Good morning. Here's the market update for March 26. Just a bit of a recap. What do we want from investments? We want a better chance of positive returns. We want less risk. Ultimately, it's a risk-reward ratio, and that's where we want to take this much risk but get that much reward. Excuse me. Our number one golden rule: only buy good value. What is good value? It's when the PE ratio is 15 or less for the share market. Why 15? Because it's the long-term average. And what PE 15 means is average risk, average chance of a positive return. Less than 15 means less risk, more potential. And currently the PE ratio for the Australian market, this is the All Ordinaries Index, is 21.9. which is well above 15. The All Ordinaries Index, this is the chart for the last year. The target for good value at the moment is the All Ordinaries. When I did this was 9085. It's a bit lower now. And the PE ratio 22.6. Target is 6,000. That the market will have a PE of 15 then, and it has a long way to fall. Value of the US market, very high, poor value. Global markets, same thing. Market temperature, it's just a bit of an indicator of whether to buy or not. And on the hot side it's really good value buy, and on the cold side, get away from it, don't want it. Interest rate yield, this is a graph that shows the average of the big four bank term deposit rates, and their longer term rates are lower than the shorter term rates, which means they expect interest rates to fall. On the positive side, Australia's earnings growth is expected to be 15%. That means the 500 biggest companies in Australia think that earnings in the next 12 months are going to be higher than the last 12 months by 15%. And in the US, that's 18%, and the world, that's 19%. So despite all the bad news in the world and oil prices going up and all the blah blah in the press, which I never listen to, and neither should you, the people running the biggest companies in the world think that earnings are going to grow over the next 12 months. And one thing that came out of the RBA meeting yesterday on interest rates was they think the Australian economy is growing too fast. So that's not a negative. Fear factor, this looks at how fast we should do something if we're going to do something. Right at the moment we're not going to do anything, we're just waiting for it to be good value so we can buy. And the value adjusted risk reward ratio is this. So the reward is 2 times bigger than the risk, so that's a good thing. My prediction: markets will go up or down or sideways. I cannot predict what markets will do. I can say they are poor value, and we want good value. So in summary, Australian shares poor value, US shares poor value, global shares poor value, and the risk reward ratio is 2.1. And the economic outlook looks positive, despite all the hoo-ha in the press about how bad it's going to be. And the market, the way things are at the moment, it's acceptable for a conservative portfolio. General advice warning: this is for general information only. Don't go changing your investments because of this, because everyone's different and you need to get specific advice for you and your situation. But there's no guarantee of what we're talking in here. It's just we do the best we can to make sure the information is correct. Before acting on the information in here, you should get specific advice for you from a professional. Well, thank you. Have a great day.